you want the thing you invest in to go up faster than the S&P index, and you want it to stay volatile, more volatile than the S&P index. And there's only one commodity in the history of the world that checks both of those boxes, and that's Bitcoin.
Michael Saylor, CEO of MicroStrategy, a strong supporter of Bitcoin and the impetus behind the company's aggressive acquisition plan, discusses the ramifications of the cryptocurrency's recent decline below the $100,000 threshold. Although the drop has raised questions about the mechanics of the cryptocurrency's market, Saylor highlights that Bitcoin's decentralized, unchangeable, and international characteristics guarantee its stability in the face of price swings. A wide range of international stakeholders, including individual holders, miners, exchanges, companies, and authorities, together oversee the decentralized financial system that is Bitcoin. Participants from different ideologies and geographical locations are brought together by this interconnected ecosystem, which guarantees that no one organization or institutional player, including MicroStrategy, can unilaterally affect or change Bitcoin's protocol. Saylor emphasizes that the decentralized consensus process and immutability of Bitcoin are essential to its success. Despite external demands, the system's resilience to change guarantees its security, censorship resistance, and adaptability. Any changes to the Bitcoin protocol must be approved by a large, international consensus while preserving its integrity and core values. Saylor contends that despite the potential short-term effects of Bitcoin's price decline on market sentiment, the network's fundamental governance and function as a digital store of value remain unaffected. Rather, in a world that is becoming more and more appreciative of digital sovereignty and decentralized financial systems, these price fluctuations present chances to consider Bitcoin's long-term prospects. Saylor and other supporters of Bitcoin believe that the recent decline highlights a fundamental idea. The strength of Bitcoin is its capacity to remain stable and reliable in the face of market turbulence, propelled by a shared dedication to its unwavering values. To learn more, see excerpts from Michael Saylor's interview.
The Black-Scholes equation, you notice that if the volatility goes to zero, the options are worthless. So for example, if you calculate the call rate, if you hold $1 million of USD and for 30 days, you're getting an annualized interest rate of SOFR, about 4.8%. If you hold $1 million of the S&P index, you're getting like 15%. If you hold $1 million of IBIT, before the options market on IBIT, you couldn't get anything. But just in the last month, when the options came alive, you can get like 80 to 100%. And with MicroStrategy, you could get 200%. So the volatility actually creates a really strong call rate. I mean, it attracts the hot money and the traders, and that's what creates the options market. And without the volatility, you can't sell a convertible bond. In order to sell a convertible bond, you need a volatility of more than 45. The S&P is 15. So if you're holding the S&P index or real estate or gold or bonds, you can't sell convertible bonds. But if you're holding Bitcoin, which is 60 vol, or if you lever Bitcoin, and we lever the Bitcoin to get to 120 vol, we can rinse and repeat that trade. We can, in essence, issue $1 billion in convertible bonds, buy Bitcoin, wait a month, do it again, wait a month, do it again, wait a month, do it again. So we're the most prolific issuer of convertible bonds in the world because we're the ones that have the best use of proceeds. What do you want? You want the thing you invest in to go up faster than the S&P index, and you want it to stay volatile, more volatile than the S&P index. And there's only one commodity in the history of the world that checks both of those boxes, and that's Bitcoin. And if you were risk adverse and if you diversified it, if you basically had half Bitcoin, half real estate, or half Bitcoin and a bunch of bonds or whatever, the volatility dies and the performance dies, the fire goes out, and you can't keep raising capital. So MicroStrategy has gone 100% Bitcoin, and we're pursuing all those various capital markets. And there's just large pools of investors that they need to buy. The people that trade equity want equity. The people that trade options need the options, and the people that trade the convertible bonds need the bonds. They can't buy Bitcoin. They don't want Bitcoin. They really want the other instruments. And so we provide them that security they need. I think every company in the world should recapitalize on Bitcoin. So like that's 400 million companies. So I think all 400 million should. I think every family, every individual should. I think every government should. I think Microsoft should recapitalize on Bitcoin. I think your bakery should. I think all the Bitcoin miners should. So yeah, everybody should recapitalize on it, right? You're talking about capitalizing on an asset that's 60% ARR, 60 vol, instead of an asset, the US dollar, that's 0 ARR, 0 vol. Another way to say it is, I think we ought to put an internal combustion engine in every horseless carriage. I think we ought to put a gasoline-powered engine in every house, every plane, well, every train, every automobile, every factory, right? I mean, I want to put a fire in every vehicle on the planet. That's what Henry Ford did. That's what John D. Rockefeller did. They put a fire in everything. And I think you could think about this as a crypto reactor fueled by Bitcoin. Bitcoin's the fuel. It's a crypto reactor. We should put one in everything. Now, in terms of the business model, let's think about the generic idea. The generic idea is you have assets. If they're going up 0% a year and the cost of capital is 15% a year, you're losing, it's minus 15% a year. Your capital is being destroyed. So that's the US dollar treasury strategy. The Bitcoin strategy is plus 45% versus the cost of capital. So everybody can do that. Meta, Apple, Microsoft, Disney, everybody can do that. Every Bitcoin miner.
According to Michael Saylor, the volatility of Bitcoin offers both people and companies a profitable chance to recapitalize. He uses the black skull equation to highlight the fact that assets with minimal volatility, such as the US dollar, don't yield any returns, but Bitcoin's 60% yearly volatility makes it possible to make more money. Saylor provides examples of how businesses such as MicroStrategy use the volatility of Bitcoin to issue convertible bonds, which are not supported by more conventional assets like real estate or the S&P index. Instead of purchasing deteriorating mining equipment, Michael Saylor encourages Bitcoin miners to recapitalize using Bitcoin. He contends that while mining equipment loses 60% of its production owing to degradation and declining returns, Bitcoin boosts productivity by 60% per year. Saylor argues that publicly traded firms should sell their debt and stock in order to purchase Bitcoin, criticizing conventional investments in assets such as NVIDIA chips, which likewise lose value. This approach promotes Bitcoin as a cryptocurrency that generates wealth and permits substantial profit development.
The more important point is every Bitcoin miner should recapitalize to Bitcoin. That's the important point, right? The big idea is there's like 20 publicly traded miners. When you raise $1 billion and you buy Bitcoin mining equipment, you're buying hardware which is depreciating 20% a year physically, where it's getting 20% a year less profitable because of the hash rate, where it's getting 20% a year less profitable because of the protocol, or 10%. So you're buying something that is minus 60% a year in productivity. You're investing in an asset which is losing 60% a year in productivity. When you buy Bitcoin, you're investing in an asset which is increasing 60% a year in productivity. So it's a very simple idea. Why would you burn 60% of your money every year, throwing it into a competitive hardware business where the protocol is taking you to zero, when you could increase your capital by 60% a year by simply buying the asset which the entire world wants? So that's what Mara is doing. That's what Hut 8 is going to do, right? That's what all the enlightened miners are doing. I think the fiat miners somehow think it's better to invest in data centers or invest in hardware. And by the way, you could say, well, we're going to switch to NVIDIA chips. The only difference between NVIDIA chips and Bitcoin mining chips is NVIDIA is depreciating 20% physically because it's burning out and obsolescing, and then another 20% depreciation because of competition. So instead of minus 60% a year, it's minus 40% a year. And so I think that if you're in the crypto ecosystem and you're a publicly traded company, you ought to recapitalize the Bitcoin. You should sell equity and you should sell debt to buy Bitcoin. You're going to make money. You'll rinse and repeat. You're going to go from a $5 billion or a $2 billion business to $10 billion, $20 billion, $40 billion, $80 billion, $160 billion. That is the Bitcoin way. The fiat way is you're going to invest in expensive electricity, expensive data centers, and depreciating NVIDIA chips or in depreciating in Bitmain chips. And that's basically taking you to zero, right? And that doesn't really make a lot of sense. Now, every other company in the world, every zombie company, every restaurant, every hotel, every travel company, every airline, every whatever, they've all got a US dollar capital structure. It's like you got a wood burning stove in your house, and I'm telling you, put a crypto reactor and fuel it with Bitcoin, and you'll have unlimited clean energy forever. And the most useful thing we could do is get that word out and get people to wrap their head around the idea of a crypto reactor on your balance sheet where Bitcoin is the fuel. And if you do that, then your balance sheet becomes a wealth creating asset.
Experts concur that even if this technology is revolutionary, cracking the encryption of Bitcoin would still take years. However, this emphasizes the necessity of creating Bitcoin systems that are robust to quantum errors. Future U.S. economic statistics, such as the Producer Price Index, PPI, and Consumer Price Index, CPI, as well as unemployment claims, are becoming more significant as the market deals with uncertainty. The Federal Reserve's interest rate decision may be impacted by these stories. Since a lower interest rate environment increases liquidity, which benefits risky assets like Bitcoin, a rate cut, which is anticipated with an 85% probability, might be advantageous for the cryptocurrency. Bitcoin is still trading above its rising trend line and 20-day simple moving average after emerging from a 7-month downward spiral.